But before I do hand over, we did sort of pose a quick question before the event, just to get a sort of a gauge of what your experiences of cash flow has been like over sort of the last few months in these strange times. So I think Ruth's going to just quickly share with you a poll of the answers we got. Thanks for those for helping. Obviously, a really positive response on the whole. So good luck, Philip. So on that note, without further ado, I'll pass over to Philip. Once he's done his brief presentation, there's a couple of questions that were handed over in advance that he'll answer, and then we'll open the floor.
Thank you very much, Andrew, and good afternoon, everybody. No doubt, if you can't hear me properly, someone will wave at me, but I'm not getting any signs that there's a problem, so I shall continue. Just by way of introduction, my name, as Andrew said, is Philip King. I've been working in credit management for over 40 years now, so I'm passionate about cash flow management, credit management, and all things to do with credit and with small business. As Andrew said, I was Chief Executive of the Chartered Institute of Credit Management for 14 years. Moved on from there in January this year to become the Interim Small Business Commissioner, where I expect to be until early next year. And in that role, I am really fortunate to be living a passion that I've had for the last 40 years. So it's been a really good few months of talking to thousands of small businesses through webinars and such like, and to big businesses, but I'll come on to that. If I may, I'll do a quick 5-minute intro through what the Small Business Commissioner does, because sadly, many people have never heard of us, and I want to address that before I do anything else. The SBC was created in 2017 under the Enterprise Act. It exists, and I think we have 4 core functions. The first is to give advice and information to small businesses who want help on getting paid, or help on avoiding not getting paid, or anything else to do with invoicing, cash flow management, and so on. And we have a number of resources available on our website to help them do that. We have a interest payment calculator to help them calculate how much interest they might be owed by a customer that hasn't paid them. And we have other tips and resources there. And I have a casework team who answer queries by phone, by email, and so on. And we will talk to businesses and help them in any way we can. Where we can't help, then we will signpost to other organisations that can. And we have good relationships with many other business organisations that can help where something's outside our remit or beyond our capability. And I should have said at the beginning that all of that service is free. The second stream is that we mediate and collect. So where a small business talks to us and their large customer isn't paying them and they've chased without any success, we will intervene and talk to the large customer and persuade them to part with cash and put it into the account of the small business. I guess not surprisingly, we have more clout than an individual small or micro business might have, and therefore we have a good success record doing that. That's another free service. All of our services are free. And so far we've collected about £7.5 million doing that for small business. And since lockdown started, we're at about 700,000 and counting. Where we can see poor practice, then I have the power to investigate and publish a report publicly on what I've seen. We've done about 8 so far, 2 on my watch, where we've identified poor practice that's systemic within a business. We issue a report setting out what we find. I issue recommendations on how I believe they should improve, and then I work with the business to implement those recommendations. And then I follow up 3 months, 6 months afterwards to make sure that we've seen the positive impact of the changes we've asked them to introduce. The final stream is changing culture. So we spend a lot of time talking to businesses, educating businesses, talking to large businesses about what they're doing. So through lockdown, I've been writing to the chief executive of large businesses where we've seen them doing good things. I saw from the poll that no one has seen payments improve. And I'm surprised by that, because we've seen some good examples where businesses have indeed speeded up payment to their supply chain. But we've also seen poor examples, which was exemplified by the survey. And where we see poor practice, I've been talking to chief financial officers, chief execs of large businesses, explaining to them the impact that their actions can have, and encouraging them to change their approach. And we've seen some really good success stories where they've done that. We've also been talking to small businesses, making sure that they recognise what they need to do to get paid. Often they don't get the basics right, so it's important that we help them to do that, but also to make them aware of just what their value is. All too often, small businesses have a low level of self-esteem and believe they have to just roll over and take whatever's thrown at them, and that's not always the case. The other element of changing payment culture is the prompt payment code, which my office now administers and hosts for government. It was previously hosted by the CICM, but as part of the recommendations from a consultation last year, it was agreed that it would be moved to the Small Business Commissioner to make all the late payment issues under one umbrella and unify activity. So we now look after that. We've just completed a survey looking at how it might be reformed and strengthened, and it will be relaunched before the end of the year with a change of approach and some additional requirements. Those aren't yet determined. There'll be a ministerial decision, but we're about to make proposals to the minister on what we think he should be recommending. And I'm pleased to say that since lockdown and since we took the code over in March, 440 additional businesses have signed up to it, which I find encouraging in the current climate. I think it's worth saying that right now, small businesses are suffering massively. And it's important, and this is one of the messages I always give to large businesses, it's important that we move beyond the transactional to the emotional. And what for a large business might be 3 or 4 rows of invoices on a spreadsheet, for a small business might indeed be putting food on the table for their family. And if we get time, I've got some examples of things like that where we've helped. And it's important that small businesses recognise the impact they can have. This isn't just around cash and finance, it's also around the well-being, the mental health of small business owners. We're going to see difficult times ahead. The availability of trade credit is going to be more important than ever, but it's going to be scarcer than ever as large businesses consider their risk portfolio and recognise that the risk presented by businesses is different from what it was when we went into lockdown. And therefore, we're going to need to make sure that small businesses are agile and flexible and can deliver things quickly for their large customers. And if they can do that, they will be more valuable than ever. And it's important that businesses themselves, as I said earlier, recognise their own value and their own worth and don't act as shrinking violets. I think it's probably enough from me, Andrew, for now. Happy to take any questions. I know you've got a couple already, so let's go through those and let's see where the conversation takes us. I'm keen that this is as conversational and as interactive as we can make it.
Yeah, no, thanks for that, Philip. I did the questions that we had in advance. I sent them over to you. Have you got a copy of them there, or?
I have. Yeah, I've got them here. Shall I read them out?
Yeah, I think that's probably the best way to. Then you can just lead into the answers nicely.
Okay, so somebody said we experience delays in payments 60 days plus from local authorities, even when our billing is correct and billed on time. Can Philip advise what local authority obligations are in relation to paying suppliers and what remedies are open to my business when payments are unnecessarily delayed? The public procurement regulations of 2015 clearly state that all local public authorities, all public sector organisations must pay their suppliers within 30 days, and they must make sure that any subcontractors cascade those terms down the supply chain. My remit doesn't include public sector. I'm private sector, business to business, but there's an organisation called the Public Procurement Review Service, which is hosted by the Cabinet Office, and they absolutely want to have examples of things like this because they are charged with addressing poor payment in the public sector. Andrew, if you can pass me details of the questioner, I can send them the phone number and the email address of the public review service, or I'll send it to you anyway and you can forward it on. But Martin Traynor is currently the Crown Rep for SMEs. He and I talk regularly. We work regularly together. We've been on 2 webinars this week together, and he's really keen to hear examples of poor practice. It's not acceptable. It needs to be stopped, and his team is there to work on it. So please pass those details on.
Yeah, I know the individual who asked that question is in the room. So so hopefully that does help. If there's a follow-up question at all, then please feel free to sort of pop it in the chat. But obviously, if that's of interest and that's helpful, then I'll by all means pass on the details afterwards.
Okay, well, I'll definitely send them across as soon as we finish.
Brilliant. Okay.
The second question was, we've noticed a spike in disputed invoices. Is it best practice to email your invoices to a customer and ask for a receipt with the wording within the invoice? Please inform us immediately if you dispute this invoice, rather than allow the customer to dispute on the due payment date. These delaying tactics are just a way of extended credit terms, surely. Well, absolutely they are. And businesses have an obligation, in my view, to make sure that their suppliers know if there's any reason why they can't be paid promptly, in the same way as they would expect you to tell them if you can't deliver a service or a product promptly when they expected it to be delivered. So yes, it's best practice to put words like that on the invoice, but it's also best practice, in my view, particularly where there are large sums to involved, to chase the invoice well before it's due. And I don't mean by that, harassing the customer, but there's nothing wrong with ringing a customer and just making sure they've got the invoice, it's okay, and there are no problems with it, and it's being processed. That's customer service. That's not harassment, and it's a really good practice. I used to work for Vodafone, and in the corporate arena, we had some incredibly large customers with tens of thousands of handsets. Getting money from them wasn't a problem because they were huge blue chip organizations and had plenty of funds. Getting the invoice approved was the real challenge. And our target in that team was to get the invoice approved by a due date. Payment would just happen if that happened. We didn't worry about payment. We worried about the process of getting 25,000 handset records agreed and reconciled and sorted and so on. And I think it's really important that businesses recognize the crucial nature of making sure their invoice is right and making sure it's accepted. We may come on to some tips around, making sure we get things right. But once you've done that, then it's absolutely good practice to follow up and make sure you've got the invoice received and in good order.
Yeah, thanks, Philip. And at the risk of sounding like a BBC Breakfast television presenter, I did have another question that came in over email. So this individual asked, with cash flow and sales performances being affected adversely in the current COVID-19 situation, how do you think this is expected to impact inflation?
Right. Well, if I was an economist, I'd probably give you 3 answers. I'm not, and I think it's a really hard call to make. I'm not, I'm no expert on this, so this is a personal view. But I think it's a really hard call to make because there are so many variables we haven't seen before. All the government aid, things like, Eat Out to Help Out. There was, Eat Out to Help Out had quite a big impact in reducing inflation because people were paying less for what they would normally buy. And there will be a huge pressure on prices as businesses start to reopen, we hope, in December. That is likely to bring inflation down. So I think it's a really hard call to make. If you want me to hazard a guess, I would say that I think it will be pretty well neutral. Because I think we'll see some pressure on prices up, some pressure on prices down, and it will be pretty neutral. But don't quote me on that because I'm no expert on this. Yeah.
No, makes sense. Okay, well, no, thanks for that, Philip. I think now's probably a good time to open the floor to any questions. If you've got a question, what I think might be the best way to manage this is if you're able to pop your name in the message chat option at the bottom, then we can sort of get you to ask your question from there. So yeah, don't be shy. Anyone with any questions, please pop them in.
I've got one, Philip. Your office hosts the prompt payment code, and you've mentioned it's being reformed. How will it be changing, and can you let us know when?
Yeah, so there were a number of proposals in the consultation that came out. I won't go through all of them. There are about 12 or 13. But in essence, the thrust was, should the criteria change? So there was a proposal that to belong to the prompt payment code, you have to pay all suppliers, 90% of all suppliers within 60 days, 95% of all suppliers within 60 days. The proposal is that that's retained, but small businesses or smallest businesses have to be paid within 30 days. So that was one of the proposals. The second proposal was whether or not the criteria should be added to. Currently, it's a very single measure of invoices within 60 days, and there's a suggestion that we might include some other measures like invoices paid to terms, for example, and that's being looked at. The second area was around compliance. So how should compliance be measured? For large businesses, we use payment practice reporting data, which is publicly available. But for smaller businesses, how might we do that? There's a suggestion that there might be an annual declaration by a director of the business, but there are some suggestions in there. The third element was how we instill confidence in it and whether or not we should launch some sort of logo, sort of kite mark that could be used. And there were some other changes in there as well. We've been analysing the results of that survey over the last couple of weeks. We finalised that on Monday. Recommendations will be going from the, I should mention that we host it for government. It's government's code, not mine. So the changes will be driven by government. But the government department is looking at the analysis we've done. They'll be putting together recommendations to the minister. He will then respond to that and recommend what he wants to do. Our expectation is that will happen before the end of the year. So it's pretty short order. We would expect to relaunch the code by the end of the year with the changes.
Brilliant, thanks.
Questions, a couple of questions fly in there, which is great. We're off the mark first. Feel free to unmute yourself and ask the question yourself, or we can read it out from the chat.
Yeah, hi Philip. So we in the business, I'm finance director of, and we export a bit more than half of our business. I was wondering if you have any tips on effective management of export credit. At the moment, we use a combination of payments in advance and letters of credit, both of which give a bit of friction in landing the order. Generally, our transactions are too small for UK export finance to be a viable solution. Is there any other avenues we might be looking at to protect our export credit?
I think for me, many of the principles that apply to credit are the same wherever you are. The only difference for me in terms of export credit is that there's an additional factor to come into play, particularly if there are language issues, and the other clearly is around shipment times and so on and so forth. My recommendation would be absolutely payment in advance if you can get it. Letters of credit give you the comfort that you're going to be paid. I think open account terms for export credit, unless it's a really good market and a really good customer, can be highly risky. Off the top of my head, I can't think of anything particularly you could do that you're not already doing. But I do think that communication is as important, if not more important, in export trading as it is in domestic. And it's really important that you build up relationships with the buyer and make sure that you've got channels of communication open with them.
Yeah, okay, thank you.
Hi, you can hear me, I take it?
Yeah.
Okay, Philip, I'm a credit manager, and in the past, when chasing customers who won't pay, especially the largest corporate sort of customers, I've then checked the prompt payment, the guys that have signed up to the prompt payment code, and found a tactful way, not necessarily to remind the person I'm talking to, because it could be somebody on accounts payable, but to remind perhaps somebody like the FD that they have in fact signed up to it and they're paying me late. It does have a certain success rate, and if not, then I reckon you're the guy to go to. And I thought you might want to pass that on.
You're absolutely right. I think that one of the things that we're seeing in recent weeks, as a result of all the webinars and so on we've been doing, is that we're getting a huge number of contacts from small businesses who've used our name without using us, if you know what I mean. So in the same way as you say, you know, are you aware you're a signatory to the prompt payment code and you're therefore in breach of it? Similarly, people are saying, you know, if you don't pay me, I'm going to refer you to the Small Business Commissioner. And we're getting a lot of success stories, which we've not even touched, which is brilliant for me. So we can claim the credit without doing any work, which is pretty good. But clearly, you know, reputational risk is really important for large corporates. And the last thing they want is to be, you know, suspended from the prompt payment code or be reported and have a formal complaint raised against them that gets published by the Small Business Commissioner's office. So it is really important that we use every avenue. And I think things like that are a really good tool to get, you know, money paid. And if while I'm talking, I will say that I quote you often, because I know that you quite skillfully raise late payment interest and charges invoices to persuade people to pay your invoices pretty early in the process. And I use that as an example frequently because I think it's a really good way of focusing the mind of large corporates.
Yeah, okay, brilliant. Thanks, Philip. And guys, questions are coming in, so please do keep them coming in. I believe you had a question regarding instant payment.
Yes, thanks, Andrew. Hi, Philip.
Hi.
There's a lot of fintech out there that is enabling instant payments at the moment. So the option to pay in 30 or 60 days could become redundant, hopefully fairly shortly. Philip, what's your office doing on following some of these fintechs who offer instant payments, and what are your views as to how long it could take, if it does come, to implement with some of these? The problem seems to be that larger companies just aren't interested in talking to these fintech platforms about instant payments. They'd rather use overdue invoices as a way of using their extending their balance sheet. And how keen are you to see instant payments come in?
I am desperately keen to see that come in. We do a lot of work with a lot of the fintech companies. As a government organisation, I can't recommend or endorse any particular product. I think I know the one you're referring to about One Day, because he and I speak on LinkedIn regularly. But I think anything that can speed up payment needs to be welcomed. And I've done webinars with many of the fintechs, not from a point of view of promoting their product, but promoting the concept of early payment. And I was on a call yesterday afternoon, actually, with a call with the CBI and a number of large businesses. And for me, businesses sort of fall into two categories. There's a category you talk about, which is businesses that genuinely want to extend their cash flow and therefore, aren't interested in any of these things. But there's another batch who actually do want to support the supply chain genuinely and are welcoming these sorts of moves. I think one of the challenges is that small businesses are often reticent to use fintech. They see it as a dark art and they're sort of worried about these things and don't fully understand them. And I see part of my brief as raising awareness of what is available out there. And it's not just fintech finance solutions, it's fintech, processing solutions, accounting solutions. I was talking to a fintech just recently where you can effectively send a text to the person that's bought your service. They can respond to that. It goes into their bank account using open banking. They don't need to key your details in. They just respond to it and they pay you, comes out of their account, and it's all done really easily. And if I'm a plumber or a, whatever in someone's house wanting to be paid, that's a really slick tool to use. And therefore, I think we need to encourage businesses to be much more creative about what they do. And we've seen this through COVID. Someone was telling me last week about an ice cream man on the beach somewhere taking card payments, which 6 months ago probably would not have been heard of, but is starting to happen now because it's we're being forced into different approaches. And I think anything that speeds up payment has to be welcomed and has to be encouraged. And certainly next year, my office is going to be adding a bit to its website on fintech solutions, trying to drive that take up.
Brilliant. Yeah, no, yeah, makes sense. Yeah, it's a changing world, isn't it? So, so yeah.
Hi, Philip. I
Hi.
just wondered, in the current environment, I don't know about you, but there just seems to be an ever increasing amount of people trying to take advantage of the current situation and perpetrate frauds, etc. Have you seen, from a helicopter view, if you like, looking at across industries, an increase in the number of disputes about where liability is going to fall in relation to payments that maybe have been fraudulently made or taken?
I think we are at the start of a tsunami of fraud and similar things. We've all seen the statistics around the bounce back loans and so on, and how many of those are believed to be fraudulent. HMRC have published numbers on the fraudulent furlough schemes and so on. I think it's an inevitable price of putting things in quickly, that there are unintended consequences, which will include fraud. And certainly, I think there are, every issue gives opportunities for people to try and exploit, doesn't it? And certainly in my office, I've seen a massive increase in scams coming through. We know that they're more and more sophisticated, but there are some quite clever ones coming through at the moment. We've seen one this week that came in. I think came into 10 of my people on one day, and thankfully none of them clicked on the link. But there are an increasing number of all sorts of imaginative ways of exploiting the opportunity, even down to a personal level, where people were knocking on doors of vulnerable, saying they've got to pay money for a COVID test, and things like that early in the summer. And I think we all need to be really vigilant about this stuff. But from a helicopter view, I think the banks are going to be under a lot of pressure next year when loans start being repayable, and we're going to see a significant amount of fraud out there that is going to be irrecoverable. And I think that's a price of the speed with which people had to react and do things.
Great, thank you.
Yeah, so we are an SME and we sell into some major high street companies, so some of the larger retailers in the UK, and we often struggle when we're dealing with them, which is more at the seasonal times of year, because they insist on quite lengthy payment terms. So we have one in particular that their payment terms that they basically take it or leave it insisted we take is 90 days from end of invoice month, and for that they then also deduct a 2.5% early payment, in inverted commas, fee. The option that we've basically got at the moment, it feels like, is we either deal with that or we don't get to deal with the customer, but it means that we are out of cash from when we're paying our supplier through to when we get the cash in, potentially for 6 months at times. So it's giving us a real problem as we're trying to grow. Have we got any leverage in the situation? I know there's meant to be some sort of late payment legislation coming through, but which is looking to cap standard payment terms, but is there anything like this is actually in the offing?
Well, I think it's interesting, isn't it? I mean, we do see stories like this all the time, and I would ask a couple of questions before I answer your question, which is, and what I always say to small businesses is, you need to make sure that the business is worth taking, however good it might sound. If you can't make money by virtue of the terms you're asked to give, then frankly you can stay in bed and lose money, and that's probably a better option right now. So I think the first thing is make sure that it is worth doing. But if it is, and it's only a question of the margin erosion by the terms, then I've talked to probably over the last 3 or 4 months, I've talked to 30 or 40 businesses where we've had intelligence that they've extended payment terms through COVID. And some of those calls have been with the minister, where we had a joint call. Some have been just me or my team. And what we've found is that in many cases, and I accept that it might be because we're having the conversation, but in many cases, large businesses and their names that you would recognise have been willing to be much more flexible with regard to their smallest suppliers, and flex the terms that they trade with them on. And we've seen several examples where businesses have written out to their entire supply base extending payment terms. But when we've had conversations with their chief exec or the chief financial officer, they have done a U-turn and agreed to pay their smallest suppliers more quickly, and in some cases more quickly than they paid them before. So I think there is scope. The question is whether or not how good the relationship is. But I'm very happy to take on any examples where I'm given that small businesses are suffering as a result of action by large businesses, and to have conversations with them. So I'm whether that's talking about Carl Moore's problem, or whether that's talking about a generic problem I've heard about, then I'm happy to do that. And in many cases, I don't share details of who's talked to me. I just say I've had reports that, can you comment on it? And in a number of cases, before we've even had the call, we've seen a change in behaviour, simply because there's a reputational risk that they're worried about. So if you want to pass me details of those, you'll find me on LinkedIn, or Andrew to share my email details, then I'm happy to follow that up and talk to whoever the customer is, and have conversations with them, even if they won't involve you. It's obviously easier if I can name you, because then there's something specific they can do. But even if I don't, I can have conversations, and they've proved invaluable over the last few months.
Sorry, just unmuting myself.
Oh no,
yeah,
no worries.
So what tips have you got for ascertaining if your customer is creditworthy in the first place, other than the usual credit agencies? Are there any inside spyware or anything that you can use to establish this?
I'm not aware of any internal spyware, but I think my conversations with small businesses generally hinge on the fact that they do no due diligence at all, and I think that's a real worry. I think clearly you need to do the standard credit agency reports, but I think we all have to bear in mind right now that, in fact, the balance sheets that they're based on are pre-COVID, pre-bounce back loans, pre-deferred tax, and all the other things that are going to impact on businesses as we go through. So I think it's important that you look at that. Several of the credit reference agencies I've spoken to are putting in COVID scores. So they're putting in scores that use more dynamic data around COVID, reflecting what they think the impact of COVID will be. But I think, for me, credit assessment is a couple of things. It's knowing your customer, so it's knowing whether or not you think they have the wherewithal to pay. It's also knowing their customers, because they may be a good credit risk, but if they've got customers that aren't, they can catch a cold and be put out of business as a result. And we're going to see increasing examples of that as we get into recovery, I fear. But also it's around, it's conversations, it's general reputation. If it's a local business, then, talking to other businesses locally about what their experience is. If it's a large business, then you can look at the payment practice reporting data on the government portal. They have to report twice a year on what their payment practice is, and you can see that. And that does two things for me. It tells you how they behave. It also gives you the opportunity, if they're asking you for longer terms, to challenge it if they're saying their standard for others are less than that. If they're a signatory to prompt payment code, that's an indication that they intend to do the right thing. And if they're not, there's a course of action that we can take if they're not behaving as they should. For me, credit assessment is a number of things. So any single source of information is never going to be that valuable, but taking them all together can give you a pretty good view. And I think the more avenues you can explore, the better.
Thank you. I mean, just as a follow-up on that, is there any way you can see who has taken out bounce back loans? Has the government published a table or anything?
Not that I'm aware of, but I think the credit reference agencies are getting that data. But to what extent? You'll recall that early on there was a lot of noise around not allowing people's credit lines to be, or credit ratings to be denigrated by the fact that they've taken out a loan. But certainly the reference agencies will be getting data on it. I mean, it'll be standard banking data that loans have been made, so it will be being captured, but I'm not sure how comprehensive it is. And some of the fintech approved lenders will probably will be supplying less information to the databases. But to answer your specific question, I'm not aware of any government data that sets that out.
Thanks.
It's not uncommon for large companies to really stand on you. It's probably the best way to describe it. And basically take our terms or not do the business. It's still quite prevalent with the really large players. However, when you're setting up your strategic relationship with them, you can sometimes bypass it. They sometimes have this sort of bravado position where they start off at 90 days and then they bend their rules what 90 days actually means. But you can sometimes get inside it. I haven't always taken it. I've sometimes walked away from business. We've sometimes accepted business. I don't know what Carl's business is, but sometimes you get advance payments on a contract or a supply as well. You can sometimes sort of get around getting some of the cash at an earlier stage. I have seen advance invoicing as well, so you get the clock ticking earlier. The other one is, do you walk away from the business? You may have to because the cash resource in your business isn't right. And I have used invoice discounting. I'm not a fan of it because you're just giving away percentage points of margin. But sometimes you've got nowhere to go if you want the business.
Well, I think you're absolutely right, and I think that it's really important, for any business, taking any business, to do the sums. If your margin is so tight that you couldn't afford to discount the invoice and you can't afford to wait 90 days to be paid, then you're far better off not taking the business, even if it means it slows your growth. Similarly, if you can use invoice discounting and you can absorb the margin cost, then it's often worth doing to get the cash flow in. But I do take your point. I think you're absolutely right that often it is bravado. I was involved in a conversation last week with a high street name where the buyers had said it's 90 days, take it or leave it. And after the conversation, the small business was put on 15-day terms, simply because the buying team have a directive that says get 90 days. But if you can get above that and behind that, often you can get around it. And I think the other thing to mention is that sometimes there's a quid pro quo. A very quick anecdote of a guy that used to work for me in my previous role, who was asked to supply on 60-day terms. His normal terms are 30. And he said that he'd listened to me preach about this stuff so often, he thought he'd try something. So he went back and said to the guy, yeah, you can have 60-day payment terms, but in return, I want a 6 months termination clause in the contract rather than the standard 30 days. And the customer happily accepted that. What it meant was that my colleague could then have longer to find a replacement customer if he lost the business. And it meant that they both thought they'd won. And actually, they both got something out of that. And I think it's important to recognise that. And very often, it can be, yes, I'll give you 60 or 90 days, but in return, I want a bigger order or less delivery points or something. I think you need to go into these conversations recognising that you have some power. They want to buy from you, so you have some power. You need to use it in one way or another, whether that's pushing back on terms or whether it's finding something else that compensates. But rolling over and lying down is probably the least favourable option.
I would agree totally with Philip there. There is normally something in the deal. It might not be the obvious way you get the deal. It's obviously helpful if you've got a unique or a limited supply product. If you've got, I don't know, bottles of water, you may be struggling to get a deal, but you are right.
Yeah, no, thanks guys. Thanks for interacting as well. It's really good it's obviously great to hear Philip's opinion, but it's great to get sort of different people's stories and how they've sort of approached different things as well. It's just been pointed out to me actually that I missed a question from Richard Carter earlier on. And where he is my boss, I probably should make time for him to ask at least one question. So go on, Richard.
Thanks, Andy. I just wondered, Philip, the practicalities of using late payment interest. I think I referred to it earlier, the threat. But how practical is it?
It's absolutely practical. And I was going to say no one uses it. That's not fair. But no, I mean many people do use it, but not that much. On our website, the Small Business Commissioner website, we've got an interest calculator, so you can put in the date of an invoice, the value of an invoice. It will tell you how much interest you can charge and calculate it for you. We had a particular client a few weeks ago who rang us. He didn't want us to intervene, but he wanted advice. and I've got the note. I've got a notes here somewhere of how much he got. He collected £8,300 in historic late payment interest just by following the advice and issuing invoices for several years of late payment interest, and boosted his margin significantly as a result. But as I said about earlier, it often, it's a really good way of focusing a business's mind. If they start getting additional invoices, it starts to make them think about what they're doing, and it is practical. It's easy to do. Calculate how much you owed, raise an invoice, and just send it. If nothing else, it'll get someone to talk to you, and I think it's a really good way. Even if you don't get the interest paid, if it gets your original invoice paid more quickly, it will have served its purpose. But there are many businesses that pay this out, and certainly local authorities pay late payment interest when they're pushed. So it's not used enough and should be used more.
Thank you.
Thanks, Philip. There's a couple of useful comments there from. If either of you'd like to sort of speak up and sort of get the explain sort of what you mean by that, and if any experiences for you, please do.
I was working for a very large company on a contract in the photocopying world, and we couldn't contact all the customers that had these photocopiers. We just couldn't. And the IT department, huge cooperation from them. And so as a one-hit wonder, we just charged everybody who had late paid interest, and hundreds of them paid. But also, I mean, we knew we'd have to man the phones, and equally hundreds rung us, but it just gave us the opportunity to talk to people we didn't normally have the chance to talk to. And it absolutely worked. They said we didn't realise, et cetera, what the terms were, because there was fees for rental and fees for the number of copies they made. There were all sorts of different things. And so I just feel that if you use it carefully and just don't do it as a matter of course, then it really is a real tool in your in the box you have of things available to you to use.
Absolutely.
Yeah, and I'd echo that thought with Philip. It's a great tool to use. We use it in our litigation cases regularly, and fundamentally, it offers you an opportunity to recover some costs towards the the loss of cash flow you've experienced for a long period of time. So why not use it? Particularly if you've been paying interest for money you're borrowing to fund the. Absolutely, Philip. Yeah. Absence of money from your customer. Absolutely right. Yeah. I think the problem is that people see it as being really difficult to do, and it's not. Go on our website. You can calculate how much to claim and just send an invoice. Really the guy in Nottingham, got £8,300, and it didn't take him long. He was staggered by how easy it was. Good return.
Yeah, makes sense. I think we've got sort of 10 or so minutes left. I think one thing that we discussed before the event, Philip, you mentioned about sort of obviously the good work you do in supporting sort of a lot of small businesses, and sort of be a good idea to maybe get an idea of how that works in practice and some sort of recent examples. If you have any, guys, if you've got any questions sort of whilst Philip's going through things, please do put them in the chat. But I thought that might be a good sort of last few minutes just to give some examples. Might be useful for people in the room.
Yeah, sure. Okay, so I mentioned that £8,300 on interest. That was one of my examples I was going to share. But I mean, there are others. There was a display design company called they designed a window display for a huge retailer in February, invoiced £31,000, didn't get paid, chased, still didn't get paid, chased again. They chased from March through to June without success. They referred it to us in June. We made contact, and they assured the display source that they'd be paid within a week. They didn't. We made contact again, and 4 days later, £31,500 hit the display source's bank account, and that genuinely kept them in business, and without that they wouldn't have done. Similarly, I was on webinar with a small business, a group of micro businesses a couple of months ago. And one of them reached out to me straight after the webinar and we got involved. And we made contact with one of her larger customers and collected £524 for her the same day. And £524 doesn't sound very much, but genuinely for her, that meant cornflakes and baked beans on the table that weekend. And we have numerous examples like that. So in lockdown, we collected £91,000 for an engineering business. We collected £524 for that particular business, and lots of amounts in between. It's late payment is a relative thing. If you're a tiny business and it's putting food on the table, a tiny amount can make a big difference. So we've got lots of examples where we've done that. If you ring us or you write to us, one of my caseworkers will pick your case up and deal with it until we resolve it or can't go any further with it. So we assign a caseworker to it at the beginning who sticks with it. We will talk to you, we will talk to the customer, we will feed back to you. If we need to talk to both of you to resolve a dispute, then we will. If it's just a question of non-payment, we'll talk to the large customer and persuade them to pay. And we're pretty close to 100% success record when we get involved. So we're happy to do that, and that's what we're there for. I think the other example I'd like to share was early doors in COVID. There was a plant wholesaler who spoke to me, who had a number of orders outstanding to be supplied to him from the growers. They were refusing to cancel orders, so he had to take delivery whether or not he could would sell them, and if he cancelled the orders, he would still have to pay for them. On the other side of the coin, the garden centres he was supplying were saying they weren't going to pay anybody anything until they reopened. So he was in a position where he'd got outstanding invoices from his customer, he'd got more materials coming from his supplier, and he had to pay for the supplier, couldn't get payment from the customer, and was in the middle of a pretty bad place. And what we did, I talked to the garden centre chain, had a conversation with them, and what they did was to make partial payment to him to at least keep him solvent. And we talked to the supplier and had a conversation with them, and they took a more flexible view on what they were doing and helped him. And very often, it is around conversations. It's not just around missives and letters and paperwork. It's actually understanding that business goes on between people, and conversations are really important. And if we can intervene and have those conversations, then we can be quite effective.
Yeah, I think that's a prevalent point. I think that's sort of the summation of in the chat as well. And we very much know it's a thing within our sector as well. It is about that communication and those relationships. Have you, obviously, Philip, you asked about in terms of the question we posed at the start, in terms of whether people have found things more difficult, whether they found them the same, whether they found them easier. It seems to be that it's more in line with people finding things a little bit more challenging. Have you, in your office, have you had sort of more businesses in contact in the last few months with the current situation, or?
Yes. So certainly, I don't have the power, unless I get a formal complaint from a small business, to challenge a large business. So what we've been doing is taking a very informal approach, and I've simply been writing to them informally and saying, can I have a chat, please? And when they won't answer me by email, I LinkedIn them and ask them on LinkedIn to have a chat, and that's been really successful. So we do a lot of things informally, even when they're outside our remit. But yes, we've been having more conversations, and we've been seeing more action. I think in terms of the survey that you did, and I think in terms of behaviours, people always say to me, which are the worst sectors? And my answer is always the same. There isn't some sectors are worse impacted, obviously, hospitality and so on. But there are no good or bad sectors at the moment. I'm seeing really good behaviour across all sectors, and I'm seeing really bad behaviour across all sectors. And the reality is that the way in which a company treats its supply chain is more part of its values than it is about anything else. And when I see businesses that treat their supply chain well, they also treat their suppliers well in other ways as well. So they do all sorts of joint initiatives and training and apprenticeships and other things that go hand in hand. And not surprisingly, we also find that those businesses treat their employees better too. So for me, late payment is part of the social contract. It's part of the way businesses see how they sit in relation to the bigger picture. And those that behave well genuinely see payment of their suppliers as part of that. And for me, payment is an articulation of the way in which they transact with their supply chain, and where they see them as partners, then that works. When they don't, then it tends not to work.
Yeah, no, absolutely makes sense. And I think that's a really sort of prevalent point to sort of end on. Yeah, I did promise we'd get you away by 2 o'clock sharp, because I'm sure you've all got sort of busy afternoons. Unfortunately, the clock has beaten us. If you guys do have any further questions, as I've mentioned throughout, or you'd like to sort of be put in contact, please do feel free to reach out to us, or go directly to Philip, as he's mentioned on. I'm sort of on LinkedIn, and I'm sure he'd be happy to speak to you and answer any questions that you do have. Just want to take this opportunity as well to thank everyone for coming along today. I hope you'll join me all as well and saying thank you very much, Philip, for your time. I hope you obviously have a good afternoon, guys, and have a great weekend.
Thank you, Philip.
Thank
Thanks,
much.
Andy. Thank you.
Thank you. Thank you.
Thank you.
Cheers, guys.
That's great.
Thanks.
Bye.